Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Here's the Bossilator Watchlist for Wednesday, September 21st, 2011. I'm Rob Booker. I'm joined by Scott Welsh, and we are looking at the Euro-Dollar 1-hour chart. I got a question today from someone who said, I'd like to test the Fibbles strategy. What time frame would you recommend? The 1-hour chart is perfect. And last week we looked at the 1-hour chart on the Euro-Dollar, and we set up a trade, and we haven't gone back to it ever since, and I wanted to spend a moment and do that. We had the opportunity to draw our Fibbles or trifecta lines in a few different places, and I'm just simply choosing the candle that touched the 800 in this case. And for a longer review about why we drew it where we did, you can look at the webinars from last week. But simply put, at the point where this currency pair had been away from the 800 period simple moving average for 200 candles, and it reached a reading of 200 on the Bossilator, I drew a retracement from the highs that it made near the 800 down to the lows that it made at the 200 mark on the Bossilator. It rose up to the 50 mark on the retracement level and tagged it, and then the entry for a trade here came at the 33 level. When it broke down below the 33 level on these fib lines, that was the trade entry for a sell trade on the euro with the trend. And that currency pair from that point on dropped approximately 180 points from there. And the stop loss on this trade would now, Scott, be at break even. So there's nothing to lose on this trade. And some people may have already, in fact, taken profit because they couldn't stand to stay in for the long haul.
That looks really good. You could take half off, or
right,
but move the rest break even, or take it all off.
Right, you could take
1-to-1, but not take it all off.
Yeah, you could take, but you could take it. If you're up 100 pips and you freak out and you take the profit, no one's going to be yelling at you. It's like it's not the worst thing in the world. The problems in the Eurozone are not over. The regular stochastic oscillator has already turned over and may continue to go down. We have an FOMC decision today, and that could produce all kinds of volatility. So some combination of taking some profit, letting the rest of it go, that's never a bad idea. That's not a bad idea at all, and that's a Fibbles trade from the Euro-Dollar 1-hour chart for your eyes only. The other currency pair that I've been looking at and that I just executed a trade on is the pound-dollar 15-minute. It's at 1,556 bars in the Bossilator. This is extraordinarily rare to see a currency pair or other financial instrument reach such a reading. It's only going to happen in times of enormous stress in the financial markets for some certain reason. Otherwise, it's likely to reverse. I still can't point to anything about Great Britain or the UK economy that's so bad that justifies this currency pair being this far down for this long. And I finally took a trade on this bullish crossover of the regular stochastic today. And I know we've been looking at it, and for those of you that have already taken a trade on this and stopped out before, this is the next entry perhaps on the trade. And past performance is not necessarily indicative of future results, and of course every single one of these trades can stop out, and eventually it will get back to the 800 simple moving average, and when it does, the amount of profit that you're looking to achieve is more than likely to be greater than the sum of the stop losses that you had when things went wrong. I entered at approximately 55.97 on this trade. You can see here I have a small first order. Average buy was 5,608. So that was the average buy on that trade. And so I am in that trade on that crossover here and hoping that the Federal Open Market Committee announces some kind of giant program of buying British pounds to revive the American economy. I don't know if that's likely to happen. Of course, that's unreasonable. But it is going to happen today. Something's going to move today, and I'm either going to stop out at break even now, or I am going to ride this up to at least 57.50, which is 25 pips lower than the 800 period simple moving average, Scott, because as time goes on, I might just freak out and want to take profit or whatever else. You know me. I might stay in forever. So we'll see what happens next.
Well, plus 800 is going to come down too, so having it below there is probably going to be right around the 800 if it moves quickly.
Right, the 800 is going to come down as well. That's absolutely true. I forgot about that as well. Let's see if there's any questions inside the... There are no questions, so we can continue. Scott, I was thinking of making you the presenter and having a talk about some of those stocks that we've been looking at.
All right, let's do it. We're going to keep updating the stocks we talked about and see a reason not to until they hit the 800. Then, of course, there'll be new ones.
Someone asks, do we always wait for a second stochastic crossover? And it's not the case that, Scott, we always wait for the second stochastic crossover, but you can see here from what we look at, we like to wait. We don't mind missing first entries. Even when the Bossilator has an exceptional reading, we don't mind waiting. We don't mind saying, I'll let the first one go. There's an entry, but I'll let the first one go. We don't mind actually waiting. And I know that sounds strange because you're supposed to just pull the trigger on stuff. But remember, this is not a methodology that we're running with an automated program, although we are developing the automated version of trading it, which will take every single trade. We're not doing that here. And so because we're trading in a discretionary manner, it's completely reasonable for us to say we're going to wait for a 2-to-1 reward to risk, and we're going to wait to set up this trade. We're not going to take it until it absolutely provides all of the elements that we look for, the 2-to-1 or better, the trend line, the stochastic crossover. And so sometimes, to answer your question, dear Bossilator friend, it does require waiting for that second stochastic crossover in order to get all of those elements combined.